this week, the Federal Reserve launched a bold move to buy $300 billion in government bonds in hopes of driving down mortgage rates. But the question is, will this work? Well, we wanted some answers, so we asked South Florida real estate attorney and author of Foreclosure Nation, Shari Olefson, to come in again and answer some questions. And if everybody at home could hear, we've all been picking Shari's brain here in the Local 10 newsroom because we want to know the answers as well. So the first thing we need to ask, we need to get the details. Shari, what exactly have the feds done?
Well, Jen, thanks a lot. Good morning to everyone. What the feds did this week is exercise one of the tools they have in what we've been referring to as the federal toolbox. They, of course, are charged with helping to stabilize this crazy economy. The tool that they used this time was to buy mortgage-backed securities and bonds. Now, the feds can buy and sell those bonds, and by doing that, what they actually do is influence the interest rates, and they also create more credit available for all of us. Those are the same interest rates that impact our home loans.
So that's why they're thinking this is going to significantly lower mortgage rates. We're hearing possibly as low as 4%.
Yeah, well, what happens is when the feds use this tool and they buy rates, it's kind of easy to look at this in terms of viewers as a sort of seesaw. When the feds exercise this power, what happens is they're buying the bonds and the mortgage-backed securities, which causes the rates of those bonds and mortgage securities to go down. Now, that rate, as it goes down, is also going to be tied to the mortgage rate that the lenders charge to us. So what happened this past week is that rate went down and our mortgage rates went down.
It all happened this week. When will we actually start seeing this happen? When will they actually take that dip?
Well, we're starting to see that a little bit now. This past week, we saw that 10-year Treasury rate go down from about 2.5%, from about 3% to about 2.5%, and we saw mortgage rates go down by about 1/4 point, which is actually a lot. So we're hovering at about 5% now. We'll probably end up about 4.5% within the next year, according to most of the experts. That's compared to about 6% at the same time last year.
Okay, here's the question we've all been asking you, Shari, in the newsroom, and we're not alone here. A lot of folks out there on the fence. Should they go ahead and buy that new home, or should they refinance their current home? What should people do?
You know, that is the million-dollar question, and if we had the answer, we would all be home in bed right now, probably not sitting here in the studio. I could call it the $1.2 trillion question. I think that when people are looking to buy a home, there are a couple of different pieces that go into that. The first is the interest rate. The second, of course, is the price of the home. And then one of the third pieces would be their current situation. So certainly, if someone's renting a property right now, that rent is actually can be viewed as something that's costing them money for not buying a home. My suggestion would be, if you find the home you like, now's a great time to buy.
And we should point out, Shari, we're talking about rates at 4%, but this is all based on what type of loan you're looking at, and also, of course, your credit.
Right, exactly, exactly.
Lots of contingent things here. All right, Shari, great information. Thank you so much for coming in and answering our questions for us.